April 3rd, 2025, a date forever etched in the annals of Wall Street. It was the day the market experienced its most dramatic plunge since the dark days of the 2020 pandemic crash. The Dow Jones Industrial Average, a key barometer of American economic health, plummeted by a staggering 1,682 points. That's almost 4% of its value wiped out in a single trading session. The S&P 500, a broader measure of the market, suffered a similar fate, shedding nearly 5%. The tech-heavy Nasdaq Composite, however, bore the brunt of the selling frenzy, plunging almost 6%. When the dust settled, over $3 trillion in market value had evaporated into thin air. The catalyst for this financial earthquake, a familiar specter from the past protectionist trade policies. Former President Donald Trump, back in the political limelight, had unleashed a new wave of tariffs on imports, igniting fears of a global trade war. Trump's announcement sent shockwaves through the global economy. He slapped a minimum 10% tariff on almost all goods entering the United States. But the real targets of his ire were clear. China, the economic powerhouse that had been a frequent target during his presidency, was hit with tariffs as high as 54% on certain goods. The European Union, another economic giant, wasn't spared either. A 20% tariff on goods from the bloc signaled a return to the days of transatlantic trade tensions. These tariffs, set to take effect on April 9th, were like a ticking time bomb. Trump argued these measures were necessary to protect American jobs and industries, but many saw them as a reckless gamble, a throwback to the protectionist policies that had defined his earlier presidency and sparked a global trade war. Few sectors felt the sting of Trump's tariffs as acutely as technology. Apple, the iconic tech giant heavily reliant on Chinese manufacturing, saw its stock price plummet. The tariffs on key components threatened to disrupt its supply chains and drive up the cost of its products. Nvidia, a leading manufacturer of graphics processing units used in everything from gaming computers to artificial intelligence, also suffered a major blow. Its reliance on Chinese manufacturing made it particularly vulnerable to the tariffs. Amazon, the e-commerce behemoth, wasn't immune either. Its vast network of suppliers and its reliance on Chinese-made goods meant its bottom line was also in jeopardy. The message was clear. In an interconnected global economy, protectionist policies aimed at one country could ripple through entire industries, leaving no sector unscathed. The retail sector, already grappling with the rise of e-commerce and shifting consumer habits, found itself caught in the crossfire of the trade war. Nike, the sportswear giant, and Ralph Lauren, the luxury fashion brand, both heavily reliant on production hubs in Vietnam, Indonesia, and China, saw their stock prices tumble. The tariffs threatened to upend their carefully calibrated supply chains and squeeze their profit margins. The pain was felt across the retail spectrum. Best Buy, the electronics retailer, saw its stock price plunge by almost 18%. Target, the discount retail giant, wasn't spared either, its stock falling by nearly 11%. Consumers, faced with the prospect of higher prices for everything from clothing to electronics, braced themselves for the impact. The tariffs threatened to push up the cost of living, squeezing household budgets and dampening consumer spending. Section 5. Global shockwaves, international markets brace for impact. The tremors from Trump's tariff announcement weren't confined to American shores. Global markets, already on edge, reacted with a mixture of panic and resignation. In Europe, the French CAC 40, a key index of French companies, tumbled by over 3%. Germany's DAX, a similar index reflecting the health of the German economy, suffered a similar fate. Asia, the engine of global growth, wasn't immune either. Japan's Nikkei 225, a key measure of Japanese stocks, sank by almost 3%. Hong Kong's Hang Seng, a bellwether for the Asian financial hub, lost over 1%. Even South Korea's Kospi, an index reflecting the performance of South Korean companies, dipped by almost 1%. The message was clear. In an interconnected global economy, protectionist policies in one country could trigger a chain reaction, sending shockwaves through financial markets around the world. Section 6. Recession fears gripped the nation. Experts sound the alarm. As the initial shock of the market crash subsided, a new fear began to grip economists and policymakers: recession. The tariffs, by disrupting global trade and driving up prices, threatened to stifle economic growth and push the United States into a recession. UBS, a global financial services firm, estimated that the tariffs could shave as much as 2 percentage points off US economic growth. Inflation, already a concern, was projected to rise to almost 5%, further eroding consumer purchasing power and squeezing household budgets. The spectre of recession loomed large, casting a long shadow over the economic recovery that had been underway since the depths of the pandemic. Section 7. The Fed's Balancing Act. Can rate cuts avert disaster? With the economy teetering on the brink, all eyes turned to the Federal Reserve, the central bank of the United States, for guidance. The Fed, tasked with maintaining price stability and promoting full employment, faced a delicate balancing act. Traders, betting that the Fed would move aggressively to counter the economic fallout from the tariffs, anticipated 4 interest rate cuts in 2025, potentially starting as early as May. Lower interest rates, by making it cheaper to borrow money, could help stimulate economic activity and offset the negative impact of the tariffs. However, the Fed's ability to navigate the situation was far from certain. Rate cuts, while potentially providing a short-term boost, could also fuel inflation, further complicating the economic outlook. Section 8. A House divided. Trump remains defiant amidst the chaos. As the economic fallout from his tariff announcement reverberated around the world, Donald Trump remained defiant. He dismissed the market crash as a temporary blip, a necessary correction in a market that had become overheated. He compared the situation to a major medical operation, arguing that short-term pain was necessary for long-term gain. He insisted that the tariffs, while painful in the short run, were essential to protect American jobs and industries from unfair foreign competition. His words, however, did little to assuage the concerns of economists, investors, and business leaders, many of whom viewed his actions as reckless and ill-advised. Section 9. A World on Edge. The Uncertain Future of Global Trade. The market crash of April 3, 2025 served as a stark reminder of the interconnectedness of the global economy and the potential for protectionist policies to upend carefully calibrated systems of trade and finance. As the world grappled with the fallout from Trump's tariffs, the future of global trade hung in the balance. Would other countries retaliate, sparking a tit-for-tat trade war? Would the global economy spiral into recession? The answers to these questions remained elusive, leaving the world on edge, bracing for further turbulence in the months and years to come.